Good morning, this is Ken Long from Tortoise Capital on October 22nd, 2013. And we're going to take a quick look at the regression line crossover system and then the technique of stopping and reversing after a critical state. This is an example from the live trading room, one of our traders. And this was his first stop and reverse, and it's picture perfect. So we're looking at 1 minute charts. We have a 30 period Bollinger Band plus or minus 1, that's the river. Plus or minus 2 is the gray floodplain. We have the blue line is a 10 period regression line, moving regression line. I'm sorry, that's the 30. And then the yellow one is the 10 period regression line, moving. And this thick red line in the middle is the mean of the Bollinger Band, a simple 30 period moving average. And we're on 1 minute charts, and we're looking at TNA, which is the triple leveraged Russell 2000 ETF. And so there was a gap up, a steady upward pressure from about 70.20 up to about 71. So this was a tradable move in the morning. And then about an hour into the day, we've got this sideways quiet channel occurring. Sells off to the volume weighted average price, the VWAP. Finds support. Wouldn't surprise us to be finding support here. And so after this price leaves the floodplain and starts to reverse up, the trader goes long at 70.67 with a 30-cent stop. And then shortly thereafter, about 10 minutes later, elects to take a minus 0.45 R loss at 70.52 when the price breaks below the swing low here and breaks through the VWAP. He stops and reverses with a 30-cent stop, which he trails, and then we get a range expansion and then the red Niagara, a bottoming tail. And then he exits at the start of the second candle, maybe gets a fill here around 69.46. And so with that same 30-cent I stop, he pulls in 3.18 R on that measured move. There was for those of us in the chat room, there was also the possibility of a Anderson regression line stretch, which we traded also and got an entry at 69.35. And then sold at 69.80 on this pullback here. And so price has now decayed back to the bottom of the floodplain, and we have, if we got a little bit of price improvement here, we would have a sideways quiet channel forming now that you can see that the slope is flat, the Bollinger Band is pinched, so it's quiet, and then for a while we had price in both regression lines inside the river, so that would be a channel. This would be a breakout from sideways quiet channel and was a shortable move at 69.49 with a price move down to 69.20, which is about 0.8 R if you play that the way we teach. So we have really a bunch of things going on inside the 1 minute channels here with the regression line crossover framework, but the one I'm just really proud of and really just tickled pink about is this stop and reverse play. This was a perfect entry on this leg because we're at a critical state and there's a measured favorable move back up to 71.20 if it decides to take off and go. But if it fails, we have a measured move back to yesterday's close, which gives us a favorable reward to risk ratio in both directions. And so the breakout from this this little sideways shelf right here is what. That's the thin ice. That's the critical state with favorable reward to risk in both directions. So that's Ken Long from Tortoise Capital with this morning's trade from the Learning Laboratory in the Tortoise Campfire chat room. So keep your risk measured and your powder dry.